$0. That's the number on the screen when you open the account. Not a starting point, a starting line. Marcus, 24, standing at a counter that smells like new carpet and old coffee. A man named Gerald slides a laminated sheet across the desk. He taps it twice with one finger, doesn't smile, doesn't explain. The rule, the less you have, the more it costs you to have it. 9 days later, a $35 overdraft fee lands before your paycheck does. You didn't spend money you didn't have. The bank decided you did at 8:14 a.m., 3 hours before the direct deposit hit. You call. You wait on hold for 11 minutes. A recorded voice tells you your call is important. Gerald doesn't work the phones. Gerald works the counter, and when you come back in person, he pulls the same laminated sheet, same finger tap, same silence. He's not being cruel, he's being accurate. The shift. You stop thinking the bank is neutral. You start thinking of it as a toll booth. Your hands do something they haven't done before. You screenshot the fee schedule. You don't post it anywhere, you just keep it. Somewhere in a server farm in North Carolina, an account number that isn't a name gets flagged for insufficient funds. Nobody there has met you. Nobody there needs to. The bank doesn't know your name, it knows your number. You close the browser tab. You don't say anything to anyone. That's the whole moment. That's all it is. $47,000. That's the balance the afternoon the phone rings. A number you don't recognize, a 614 area code. Someone who says your name like she's read it off a screen. Diane, private banking. She has a rate. She has a program. She has 3 minutes she'd like of your time, and she's already used one of them telling you how special the offer is. You don't say yes. You don't say no. You say you'll think about it. She calls again 4 days later. Same script, warmer now. She remembers your name without checking. She mentions a golf outing, a wine event, things that have nothing to do with interest rates. You ask for the terms in writing. There's a pause on the line, half a second too long. The rule. Every rate they offer you is a bet on what you'll deposit next. The PDF arrives that night, 6 pages. On page 4, an annual fee she never mentioned. $250, waived only if your balance stays above $50,000. Your balance is $47,000. The bank doesn't know your name, it knows your number. The shift. You stop assuming the offer is a gift. You start reading it as a hook. You don't call her back. You don't explain why. You open a separate account instead, one with no name attached to it, just a number and a rate you read yourself. $310,000. That's the number on the statement the week the invitation comes. Not a phone call this time. An envelope, heavy stock, your name embossed instead of printed. Private client program. A room with mahogany paneling and an advisor named Marcus Whitfield who shakes your hand twice, like the first one didn't count. The rule? Access is never free. It's just billed differently. Brianna from the office 2 desks over hears the word private client and says it back to you at lunch like she's trying it on. She got in at $290,000. She mentions her advisor's first name the way other people mention a doctor. You don't say anything. She checks her phone. The advisor lays out a folder. Proprietary funds, he says, built in-house, designed for clients at your tier. He doesn't mention the expense ratio. You find it on page 9, 0.94%. Your current index funds run 0.03%. Your hand is on the pen. The signature line is 3 inches away. You stop. You read page 9 again. You do the math on the back of the folder. The difference, compounded over 30 years, is 6 figures. Not a small number, not close. The shift. You stop measuring the room. You start measuring the paperwork. The bank doesn't know your name. It knows your number. You slide the folder back across the table. You don't explain why. Marcus Whitfield nods once, like he's seen this before. $10,400,000. That's the number a trust officer named Ellis reads off a screen without looking up. Age 37. No envelope this time, no phone call. A meeting was simply scheduled, and you attended. Family office services, he says. Not private banking, something above it. The rule: the bank stops selling you products the moment you become the product. Ellis slides a single document across the table. A grantor trust structure. Your name nowhere on the asset ledger, only on a page filed separately, 3 layers down. He doesn't explain what it means. He lets the document do that. Your brother calls that week. He's heard about the trust from someone who heard about it from someone else. He asks if you're okay. You say you're fine. You don't explain the entity structure. You don't explain any of it. That's the cost nobody put on a fee schedule. Distance. The kind that doesn't show up as a line item. The shift. You stop being a customer. You start being a relationship to protect. Ellis mentions the effective tax rate the trust structure produces, 3% lower than a direct hold would run. He says it once, flatly, and moves to the next page. Weeks later, you're standing at a bank counter. Different branch, different city. The teller doesn't look up, doesn't know your name. The bank doesn't know your name. It knows your number. You used to think that was the toll booth. Now you know it's the whole road. The next video is every level of investing, from $100 to your first $1 million. Subscribe. You're already in it.